Hello, everyone. Today is Friday, July 28th, 2023. My name is Evan. Welcome back to another edition of Stock Market Weekly, episode 692, where we break down the most important trends, price action, noteworthy moves you may have missed across financial markets, hopefully to prepare you for the week ahead. Let's get right into it with some of the takeaways from this week. It was a very action-packed week of headlines, catalysts, news for markets to digest. The big one was the Fed on Wednesday raising the overnight rate, the Fed funds rate to 525 to 550 range. This was priced in. We knew about it. We talked about it. Markets basically had a lock on this, 98% plus confidence ratio that this was happening, but really it was the press conference of Powell after the fact, and quite honestly, they didn't really reveal a tremendous amount. It never really does, but I guess, reading between the lines, a lot of folks kind of coming away thinking the Fed is a little more dovish. They're going to remain, entirely data dependent. Every meeting is supposedly still live looking ahead, but it does sort of suggest there might be another one, possibly two more hikes in the future, but it's going to be data dependent. So the market is going to be looking at all of these big econ data, unemployment, PPI, CPI, very closely. And I'm sure you're going to get a lot of ping pong action on those days looking ahead in the next couple of months before the next Fed meeting in September. Earnings season also continues to really just push in full swing here. We had a lot of heavy hitters this week. Google, Microsoft, Meta. We're going to talk about a lot of them later in this video. Mostly mixed, sort of neutral, positive. There were some negatives in there as well. We're going to break it down in just a moment here. Semiconductors pushing to fresh all-time highs. This is interesting. It's notable. Depends what ETF you want to look at. You're either at all-time highs or you're pretty close to it. A lot of the individual underlying stocks within that index also in kind of that same boat. That is notable as a big leadership group. It has really been the powerful leader group here over this big bull market going back 10 plus years. Interest rates also ticking back up. That's not a good thing, but markets are sort of taking it in stride, not caring a whole lot, but that was notable this week. And we also had China breaking out, which we're going to talk about in a little bit as well. So plenty to talk about. Let's get into it here in just a second. All right, we've got some charts. This is Warden TC 2000 here, and as a reminder for you Warden users, check out our website. We've got lots of downloads, both free and paid, stock scans, indicators, layouts available for you. Indicators kind of like you see here. This is our support and resistance indicator, these green and red lines, dots. Those are programmatically overlaid on charts, and they sort of just visually help you trade and kind of monitor and measure those key levels where prices have inflected in the past. So we've got a lot of cool things like that. And if you're not a Warden user, well, we've got a referral to the platform. If they are running any promotions, you can get those promotions, sales, discounts, free months, depends what they have, using that link in the description of this video. All right, so let's get into the data here. This is our index view, and you can see on the week it was positive across the board. Dow Jones, SPY, Nasdaq, Russell 2000, all finishing green, anywhere from 0.5% to about 2.11%. Nasdaq was the leader this week, rebounding nicely, swiftly through lots of those big company earnings. If we take a look at volatility indices here, you can see both of them were lower this week, so coming down. Nasdaq vol down at 18.89. That's a pretty low reading for it. One of the 52-week lows, I believe, or multi-year lows. For Nasdaq vol, VIX is at 13.31. And now this week wasn't without some volatility. Take a look at these line charts here. So this is really, Thursday's action where you see these just big spikes down. This is basically a 5-day line chart of all the indices. And you can see we just had a lot of volatility. We had a nice rebound into the close here. And that is, I think, a symptom of this data dependent Fed. The market is going to be swinging like a pendulum on these big releases. And I think we're going to, yin and yang here over the next few weeks, at least, as the market prices in sort of this inflation versus versus economic stability and growth environment each and every release. If we move on to sectors here, you can see most things in the green. Communication services, top of the list here, almost 5% up. Energy in the second spot, followed by materials, so pretty diverse group there on leadership. On the downside, it was the defensive tone to the market, utilities, healthcare, and, well, real estate, not really defensive, but in the bottom of the barrel here. Those were the red ones, and financials were slightly negative this week as well. You can see on the 1 month returns, everything is in single digit sort of green territory. Now, if we move on to our sector grid here, so this is our smart trend filter indicator and really just sort of measures price and volume spanning across time, helps us kind of smooth out trend and just kind of see a very objective view of who's in control here. And when we look across all of the sectors, you can see it's a lot of green here. So a lot of sort of broad-based participation. Real estate ended up transitioning into the neutral yellow state here. Consumer discretionary kind of in yellow, but still angling up. Utilities starting to move back to neutral, but otherwise pretty constructive. It's hard to find a lot of fault here in the sector overview. Most things are, neutral to positive, at least on the daily time frame. Now, speaking of market breadth, if we take a look at our breadth view here, you can see bottom chart here, which is one of my favorites to look closely at. Stocks hitting 52-week highs versus the stocks at new 52-week lows. Take a look at the big green shoots here, still expanding to the upside. We get a couple of days where we see some selling pressure. Even Thursday, we had a big kind of sell pressure day here, but notice we still outpaced 97 to 27. I don't want to get hung up on these specific numbers because every platform kind of reports slightly different. It's the ratio that is most important. And you can see that we are just still outpacing more stocks hitting 52-week highs than those making 52-week lows. Our trend barometers here on the stocks above a 200 SMA continue to be supportive. 50 SMA kind of flattening out, but still, generally speaking, pretty supportive. If we move over to IBD, so IBD Investors Business Daily, they're a sponsor of the show. They make the show possible. So thanks and shout out to them. There's a link in the description for their digital service, and this is the top 10 stocks from their IBD 50 list. And I'm just keeping a pulse on this week by week, kind of seeing how some of these stronger kind of growth appetite names are holding up. And it was a very constructive, positive week for them. You can see 9 out of 10 were positive. AMPH was the only standout loser this week. Strong single-digit gains. Monday.com, I see this sneaking up in here. So this was first time we've seen this in the top 10 for IBD 50 list. So looking like it replaced, I can't remember what it replaced, but it's in here as well. So nice breadth performance here out of these names. And again, you get access to their IBD 50 with a link in the description of this video. Now, moving on to commodities here, you can see on the week, oil was at the top of the list, 4.5%. And then take a look at the 1 month returns. This is something we've been kept a very close pulse on. We've been looking at oil just being more resilient, climbing, breaking out, resolving up. We've talked about this every single week, and it continues to perform well here, up 15%. And surprisingly, this is in the face of a very strong dollar rebound. The dollar index was up almost 1% this week. It basically it didn't get back all the losses from the prior weeks, but it certainly made a pretty good stance here, and that was impressive to see oil continuing to do well in the face of that. Copper flat here. You can see DBA was, let's see, is this copper? I got to check the symbol here on JJC, but DBA was down slightly, gold down slightly this week, silver down slightly, same thing with natural gas, down 2.5%. So a little bit of breathers going on here in commodity land. You can see we've got our smart trend filters. Most things are still in kind of neutral to positive territories, and you can see the dollar here trying to print a fresh buy signal as that strength picked up this week. Now, interest rates are where things aren't that rosy. We see interest rates, yields across the curve here starting to pick back up. Very much the same kind of longer term basing pattern, holding pattern that we've effectively been in here for yields, again, across 5-year, 10-year, 30-year. So we're not seeing a big breakout just yet, but we are certainly getting back up to the top end of the range here where things just get a lot more dicey. For now, equity markets don't seem to care too much. Let's see how this plays out. This is still one of the big kind of straw that breaks the camel's back, so to speak, in my mind, risk factor. If yields start to really go parabolic, break out, trend higher here, I think we've got problems in equity market land. If that happens, we're not there yet. So let's see if that scenario plays out. Move index, you can see, was, kind of flat and still, again, in line in its holding pattern, slightly down, series of lower highs and lower lows at this time. Now, let's move on to some of our analysis here on the S&P 500. This is our trusty roadmap that we've been looking at, and we, talked about ever since breaking above 4,300, really wasn't a whole lot of, levels to pay too much attention to. There was this big kind of gap all the way up to 4,600, and now we have finally arrived at this, I guess I'll call it a target. It's not how I like to per se think about it, but it's certainly a level of interest, and we are here. And so if we go down to the daily chart, this candle yesterday certainly had me, kind of smiling, where we gapped up right into this 4,600 zone. I mean, again, these are levels that have been drawn on the chart that we've been talking about for many weeks. And the fact that we finally got all the way back up into this area and then just failed gracefully was really just a technical sort of beauty here. But, sellers did not seize the day. They did not manage to follow through lower. We, in fact, got the exact opposite on Friday. We got this big buoy rebound here where we gapped up, held the gap, and then proceeded to kind of make a little bit of Friday progress here with a very, very clear inside session. So the story here is still to be written. It's going to be interesting to see how we follow up next week. It's still a busy earnings week. We've got Apple. We've got lots of other big companies still reporting. So the market will be taking all of that in stride, but we are at a very fairly, in my book, influential, important level here. Just like when we broke above 4,300, I guess now is almost the time where it's time to, plot out the next big level. And I do think it's all the way up here at all-time highs, which we made back in 2021. Feels like forever ago. We've got some minor kind of areas in here I would pay attention to right around this 4,700 zone. But this block up here, this set of bands up here, that is what I'd be paying attention to. So that's approximately 3.5% and then 5%. I mean, S&P 500 is 5% away from making all-time highs. Those headlines will be across every newspaper outlet, and so on. When and if that happens. So let's keep an open mind. We're not there yet. We're at a battleground spot. We've covered a lot of ground here. Some healthy digestion. Again, I love digestion. I love some chop. It just makes things easier and cleaner in my eyes. I know that frustrates a lot of people, that type of environment, but I frankly would love to see us just kind of move sideways and kind of, chill out a little bit, catch our breath, and then, get ready for the next move. So we'll see how that all plays out. Russell 2000 also at a very big level here. So you can see it's really staying pretty resilient as well. It's gone 5, 6, 7 days sideways now, pretty tight. It's holding its gains. It's digesting nicely. It's at a big prior level. This is where we peaked out in February of this year. It's where we peaked out pretty much in August of 2022. And of course, there's lots of supply and chop in here in early 2022. So the market, Russell 2000, really kind of, catching its breath, hanging out here at prior resistance. Going to be very interested to see how that all shakes out. And then, of course, the Nasdaq 100. We talked about this chart last week. Remember, we had that sell-off. We were talking about this 372 zone as being the line in the sand that we wanted to see the Nasdaq 100 hold above. And it certainly did, or at least it's in the process of trying to hold above it right now. Now, of course, there's some bad scenarios that can happen here. What if this turns into some type of lower high? We roll over here, right? Apple, sinks the ship. Market gets a negative reaction. We start rolling over. We break below 370. There are pessimistic scenarios that can absolutely happen here, but I think we have to give the benefit of the doubt to the buyers now. Trend remains up. We're holding support levels. We are, bouncing where we need to. Dip buyers are showing up. So we got to give the benefit of the doubt to the buyers still. Nasdaq looks pretty constructive here. Again, this also had a pretty bad session on Thursday where it had a nice gap up to start the day, and then it closed on its lows slightly negative. But once again, Friday, we popped right back up and basically got all the way back up to Thursday's highs. I think you have to like that action. Sellers failed to break this market down on Thursday, and therefore you might need to expect a fast move in that opposite direction. So Qs and pretty much all these markets still technically holding up in their trends, doing well, and continuing to exhibit that positive momentum. Let's take a look at some other markets. We talked about yields. So this is obviously the negative part of kind of financial markets in my eyes. You got IEF, you got bond markets, which are rolling over. When bonds roll over, that means yields are going up. You can look at the 10-year Treasury yield here, and you can see we got this big surge up on Thursday, inside day on Friday. And again, getting back up to the top end of where rates have been in this past 12-month period. So keep a very close eye there. You can look at TLT as well, which is back down to the bottom end of this big holding pattern that it's been in. If we start to drop aggressively from the bottom end of this range, I do think that is bad. That can spoil the bull party, but it has yet to happen. There seems to be a bid that just appears every time this is about to roll over. So that is Treasury yields, USO oil. So here it is. Once again, this roadmap, again, we've been talking about this first as consolidation, the stabilization, the breakout above this trend line. And now here you can see we are very much clearly getting above this channel here. We're putting together multiple weeks in a row, and look how it's doing it. It's not a tremendous amount of volume or big expansion in range. This looks just like a systematic drip higher here. This is a very contained kind of grind up uptrend here, which I do like. I think there is something sort of peaceful about it. It's just working itself up. It's not getting a lot of attention, but it's certainly breaking out and just technically resolving higher. So oil continues to work well now. It's a bit of a chase. I don't see a fresh pattern per se, but the trend is definitely nice. MACD pushing to new highs here. Oil continues to look good. I also wanted to talk about China today. China, I think, was notable and interesting, particularly on Friday. So we had a 5.5% move in FXI. I know a lot of folks may not trade this, but it spills over to a lot of the American traded Chinese companies, ADRs, BABA, right down the list. You can go and find a lot of companies here that are big over there. But FXI, take a look at this breaking out here to multi-month highs. Beautiful kind of holding pattern, frankly, digestion pattern over the past couple of months. You could look at something like KWEB, which is China's internet ETF, which again has just seen, look at the volume pattern down here. So just lots of good spike green days coming in here, 7.5% up on Friday, clearing to new multi-month highs. Things just look pretty good over there. So keep an eye on that. And let's talk a little bit about our heavyweights here that reported earnings. So we had Google was one of the companies that reported this week. It finished the week up 10.5%. Google has sort of been, a little bit sluggish, a little bit left behind here in terms of Microsoft and just some of the other AI craze and things that have been going on. This has been a little bit of a slower moving giant, but it clearly, is getting some love here now. It's breaking out. It's holding its earnings gap. It's putting in a lot of consecutive green days. So, it looks good. Again, it's a little bit of a chase now. I don't have any position in this or anything like that, but it seems like it may want to just, kind of drift up here till around 143, 144. That's the next big level I'd be paying attention to. Microsoft is interesting. So Microsoft reported earnings and a little bit of that momentum dropped out. I posted this chart on Twitter, and you can see, this again, it's not a claim that it will fail, but it objectively is failing here at these prior all-time highs, right? So you had these prior Microsoft all-time highs back in November 2021. We had the big correction, of course, and now it's come all the way back. And last week was interesting. We talked about it last week. We had this nice big push up to fresh all-time highs, fresh all-time Microsoft closing highs, get everybody sucked back in, put those headlines out there. And then it was, sell, sell, sell inside day earnings and then just sell again, and a breakdown and a rejection of those all-time highs. So it's a dangerous place to fail. This is what the monthly chart looks like. There's still a few days left in this month, but take a look at that candle here. Again, just kind of sticking its head above to prior all-time highs, and then a nice kind of inverted hammer here, doji, that's closing on the lower end of its range. So let's keep an eye on it. Again, most of this space is still positive, constructive, and in an uptrend. So personally, I don't have any shorts on this. I'm not looking to personally short it yet, but I'm just keeping an open mind. And if it starts to break back over 352, all bets are off, right? Then the trend is up, the breakout seems to be back in action, and that's certainly where Microsoft could start to accelerate, but we're not there yet. Speaking of accelerating though, Meta reported earnings this week, up 10% as well. You can see dip buyers stepped right back in. I think I posted this chart on Twitter earlier this week. We finally saw, this was kind of like the heaviest selling really almost all year that we saw in Meta, which was basically a 10% correction right ahead of earnings. Maybe a little earnings jitters there. And then, of course, numbers came out and reaction was constructive. Saw some good heavy buying there. Trend is continuing. And, lo and behold, we've got Meta now, which is basically 10-15% away from its all-time highs. Just an absolute monster of a smooth, perfect, what is that? Just a perfect angle to the upside here on this recovery. So it's been impressive for holders there. Congrats. And I couldn't leave without talking about Roku. Roku, smaller company, of course, not a big market cap, heavyweight dominated company, but up 32% today on after reporting earnings. Big volume, big breakdown. I mean, this thing has been just totally crushed for the past 2.5 years. It was like a 90% correction, and now it is about 134% off of its lows. It has a long way to go to get back up towards its prior all-time highs, but certainly seeing a turnaround story in the making here. So Roku, congrats to the bulls or longs that survived this correction, up 32% on Friday. So that is what I have for today. It was a busy week out there, lots of mixed actions. Hopefully everybody managed it and did okay coming out the other side. As always, I'd love to know your thoughts. What are you looking at this weekend? What are your takes on this market? How do you think we're starting August on a optimistic note? Are we too long in the tooth? Leave your comments below, and I wish you a happy, healthy weekend. We'll see you back here next Friday. Don't forget to check out those links in the description of our video. TC2000 storefront, downloads, referrals, IBD. Shout out to them again for sponsoring the show. Thanks again, everyone, and we'll see you back here next week.